Good evening, friends. Good evening. There should be some energy in this room. Okay. Anyhow, a warm welcome to each and every one of you for coming for this unique investor education program, which is hosted by Navemarg Foundation along with White Oak Mutual Fund. And we are very much privileged to have Sir Aashish Somaiyaa over here for today in Goa. Especially come all the way, flew from Delhi, came yesterday night and is leaving back today night only, back to Delhi. But he has come specially to Goa only to meet all of us over here and share his experiences with us. 20 years in the mutual fund industry, and especially myself being 14 years in it, I have been every year attending his programs as far as our mutual fund conferences are concerned. Any conference will not be there without Aashish Somaiyya's presence over there. So whether it is a national conference, whether it is the IFA conference, any conferences, wherever it's there, only thing is that from this year it has changed now to White Oak because we are so much used to him as far as Motilal Oswal is concerned. Now he has taken up a new challenge and something very unique in this career of his as far as White Oak Mutual Fund is concerned, because this mutual fund was just started about 1 year back as far as the operations in mutual funds. Before that they used to do more of foreign investments and offshore investing. So now they have started up with the help of Premka, who is their founder and the CEO of the company. They have started this new mutual fund company in India. All the licenses, everything is in place, and now they are really getting set to actually take a very, very big leap as far as our mutual fund industry is concerned. Coming to Navemarg Foundation, in fact, this is one of the public awareness programs that we are conducting. Normally, regularly we conduct it and we have a huge audience normally in Panjim. Like last month we did it in Panjim. But then I said, yes, we have to do it in Margao also, because many people in Margao cannot come to Panjim and Panjim people don't come to Margao. So that is like we have to have. I said, why should we do it every time in Panjim when we have the bigger audience here in Margao? So we decided to have this time here in Margao because last month we did it in Panjim. And like this in rotation, it will be on a monthly basis at different places. So from today's event, besides of course the financial literacy, we are also into a lot of social causes. I'm sure you must be knowing because many of you all are there members of the Living Happily with Diabetes clubs, which is something unique in the whole of the country or the whole of India. Nobody has ever started such a concept wherein by providing these yoga trainers and exercises regularly thrice a week, automatically we are able to keep sugars under control. And why this was started was because during COVID time, I was actually involved in the COVID relief operations, and I have seen so many people dying in front of my eyes, and all of them had diabetes. And their death was only because of high sugar levels and comorbidities, in the sense, no exercise. The lungs were not functioning. So once you start with exercises, automatically the thing comes into the system, and the best part of it is what we found is group therapy gives you 80% of the healing. If you ask anyone to do, including myself, if you ask me to do at home yogas, maximum is for 5 or 10 minutes or maximum one pose only. We will not be able to do more than that at home. If you tell me to do it, it's very difficult. But when I go in the group early mornings, because I am fortunate that I can join in any group, so every morning I keep on moving to one club or the other. And being with the club members, it makes a big difference because doing exercises together gives much more effect, and that this is what we have started. And as far as Goa is concerned, we already have 23 clubs all over Goa, and the 24th is starting in Ponda on Tuesday again. So Ponda will have total of 3 clubs now from Tuesday, and our total membership has already crossed more than 800 members all over Goa. So that is one big unique achievement of ours, and we will take it forward in such a way that we will see to it that if anybody talks about diabetes, it will be Navemarg Foundation. So diabetes is the major cause, and financial stress is definitely another cause of diabetes. So if you have financial freedom, your chances of being high sugar levels also are very less. So financial freedom is something which we are fighting for, and what we have noticed in Goa especially, we have a lot of savers, but very few investors. Even in mutual funds, I have done an analysis, 90% of our clients are saving in mutual funds. They are not investing in mutual funds. So because of that, we have seen why people don't actually grow rich in Goa. They have money, they become wealthy, but not rich. I don't know whether you know the difference between wealthy and rich. My definition is something unique which no one has coined it, and it has already gone on the hoardings all over Goa now. Rich is basically how much you give, not how much you have. How much you have is wealth. How much you give is rich. So all the philanthropists, if you see, are all investors. They are not savers. If you check any philanthropist, he will be an investor. We cannot become a philanthropist if he's not an investor. Now, even in my case, I have been able to do it only because of investing rather than saving. Because most of people, they save in mutual funds. So that is one thing which we wanted to power this. And then after, once he finishes his presentation, we will see to it that we'll get some more ideas about investing. So before the program starts, first thing is we will be giving a fine of 100 rupees if anybody's phone rings. So please put your phones on silent, because if it rings, it disturbs. So, and there will be a fine. 100 rupees fine will be there for the phone ringing. And we will take it. We will give you a receipt. ATJ exemption is there. It will come to the foundation. We'll give you the receipt for that. So please switch off your mobiles, especially as far as the sound is concerned. If you want on silent mode, it's fine. And another special thing for today is we have 3 special prizes for the 3 people who really ask good questions. So the more questions you ask, the better your chances of winning it. Okay, so those who ask the question, but you won't get the prize when you ask the question. We will judge which is the best question. Whichever question Aashish sir takes the maximum time to answer, that will be the first prize. If he answers in 1 word, the marks are less. If he answers for 5 minutes, the marks are more. It all depends how he answers. You have to ask him the question and he has to answer. And based upon how long he takes it, that means that question is interesting. If it is not an interesting question, he'll finish it within 5 seconds or 10 seconds. So the prize is based upon how long it takes to answer your question. So try and file whatever doubts you have as far as mutual funds is concerned. Try and pick up whatever this and take this opportunity to actually grab maximum knowledge out of this. Okay, so I won't waste time because now, yeah, we will get the thing started, because before 8 we would like to wind up, because there are many people who have come from Vasco and all different places, which we need to finish it on time. So we have started on time and we will end on time as usual. Okay, so over to you, sir. Aashish sir.
For organizing this and also inviting me here to speak to all of you. It's my pleasure to be here today. While this is being set up, I'll just pick on something that he mentioned. He did mention the difference between growing wealthy versus rich, but in that context, he also mentioned something about saving versus investing. So he explained what is the difference between being wealthy and being rich. But does everybody know the difference between saving and investing itself? Does everybody know? Anybody who knows the difference between saving and investing? You can go this way. There's a wire there. Yeah. So anybody knows the difference between saving and investing? Anybody would like to guess?
Saving is your own saving, investing you are growing it.
Okay. So what sir is saying, saving is obviously you're just keeping your money. It's your own money, but when you invest, it should grow. Anybody else has any other thought on it? See, I think he's on the right track, so I'll just pick on what he said. You have to think logically that, and in any society, how advertisements are made, that gives you the deepest insight into how people are thinking and what is important for the people. What kind of visuals do they show you when they show the advertisement of a saving product? What visuals do they show you? What is the picture or visual that is shown to you? Anybody?
The returns.
Are you sure saving products show returns?
Rate of interest.
No, I'm asking what is the visual or what is the creative or what is the photograph? Sorry? Piggy bank. They show you a piggy bank, right? And then they show that some coin is being put inside the piggy bank, correct? Why do you think they show the piggy bank, and why do you think that they show money being put in a piggy bank for a saving product? Because saving is about keeping safe. So if you put your money in a piggy bank, it doesn't grow. It is meant to just protect whatever money you have, like sir mentioned. But when you talk about investing, when it's an investment product, what type of visual or what type of picture or creative do they actually show you? They typically show a small sapling becoming a plant and a plant becoming a tree. So the difference between saving and investing clearly is all about the growth itself, right? Because so like Dr. Celso mentioned, most people, even when they are saving, they seem to be thinking like sir mentioned, most people, when they are saving, they actually seem to be thinking that they are investing. That is the biggest trap or fault that one can think of. Second important thing which I mentioned, that like I was saying, that advertisements show you a lot. Now, let's say 20 years back, say early 2000s, when cars were being advertised, which cars were being advertised on television?
10%.
No, 20 years back, not 40 years back. Maruti. Maruti and what else? What is the value of the car which was being advertised 20 years back?
50,000.
No, sir, I'm saying 20 years back. You are giving me answers of 40 years back.
2 lakhs.
They used to advertise Maruti 800 or Maruti Alto or that whatever A or something, and Hyundai Santro and those. What was the value of those cars that time which was being advertised? 3 to 5 lakhs. Which cars are being advertised right now? What type of cars are advertised on TV now? EVs are advertised, okay. What else is advertised? Sedans are advertised. Whatever cars are advertised today on TV, what is the value of those cars?
In lakhs, 20 lakhs, 50 lakhs.
15 lakhs.
50 or more.
15 lakhs, right? They are not advertising about Mercedes as of yet. Do you see any Mercedes ad on television? Sometime you might see it in the internet. If you are doing too many luxury purchases, or if you're a big spender, then sometime internet might show you some Mercedes ad. But generally on TV, what comes is basically what comes on TV. That's basically all 15 lakh, 20. Why do you think that previously they were advertising 3-4 lakh rupees or 5 lakh rupees, and now they're advertising 15-20 lakh rupees? What do you think is the reason? The wealth has increased and the buying capacity has also increased, right? I'll give you another example. When you talk about, say, food, what type of products were being advertised on TV 20 years back? What were they advertising on TV 20 years back when it comes to, say, food items? Papad, okay.
Kellogg's, cornflakes.
Yeah. Kellogg's 20 years back? I don't know.
2010.
Okay, let's say papad is one item. They would advertise a lot about biscuits. Right? What are they advertising about food items on TV today? Okay, what else? Pizzas. They're advertising a lot about pizzas. Correct. So, wow, thank you. So, how a country is progressing, how people are progressing, what people are thinking, you can get a lot about that trend depending on how people are shaping up, how the wealth is shaping up, and how they are. Don't switch off all of them, please. Okay, this is enough. Now, I'll come to, our topic for today is small is powerful. Of course, I'll come to that topic which is about SIPs and which is about investing. But before I do that, a little bit more on what I was telling you about how our country is changing and how people's preferences and how people are actually changing. So, 2 or 3 things which I want to First of all, there are a few questions here. Okay, so I expect that you answer those questions and then we move forward. So, first question, who's the most successful and most famous investor in the world? Warren Buffett. Okay, fine. What is common between you and Mr. Buffett? It is not as funny, it is actually
We
true.
both are trying to invest, or we want to invest.
He wants to invest, you also want to invest. Okay, anything else?
Does not want to lose money.
Sorry?
Do not want to lose money.
Don't want to lose money, okay. Do you mind temporarily losing money? You mind losing money on paper or you mind losing money really? A lot of time when you invest, you can lose money only on paper. You don't actually lose money, right? But anyway, that's not the answer. The answer is, if at all you ever Googled about him, if you have ever seen any of his interviews, he says, this thing which I'm saying, which is common between you and him, is actually, he says it's his main reason for his success. Do you know what he says main reason for his success? In his own words, he won the ovarian lottery. That is what he says. And what it means actually, most important thing that all of us, see what happens is we are here today, right? Say 16 December, 7 in the evening, we are in, say, Goa, beautiful place, correct? And you're sitting here and you are listening to this. You have reached this particular juncture after a series of things related to your luck, correct? Did I say anything so powerful? So, the point is that there are millions of people who are born in different parts of the world on different days and different minutes and different times and all those things, right? But what you do starts after you are born. Where you will born and when you will be born, till that you have no role to play. But you know the reality is where and when you are born has a big role to play in how your life and your future will actually go. So whatever you may attribute to your luck and your hard work, that starts after a lot of luck has already played out. Correct? So let's take a simple example. Whenever Mr. Buffett is asked, so of course he's one of the richest people in the world. He's one of the most successful, actually the most successful investor in the world. Why people say he's the most successful investor, not because he's amongst the richest. There are many people who are richer than him also. But why is he still called the most successful investor? The reason is because he's only an investor. See, all the other people, whether it is Elon Musk, whether it is Mr. Mukesh Ambani, whether it is Mr. Gautam Adani, whether it is Mr. Jeff Bezos, all these people, they are businessmen. And they have created their wealth by running a business. Mr. Buffett is the only person who is purely an investor. He's betting on other businessmen, but he's richer than most of the businessmen that he ever bet on, actually. That is why he is known to be the most successful. So apart from being very successful and very rich, it is well known that he is very humble. So in any interview, if he is asked that, Mr. Buffett, what is the secret of your success? More often than not, he says that I was born in the United States of America in 1930, and my investment career progressed through 1950, 1960, 1970. And you know that after Second World War, America became a superpower, richest country in the world. Before that, not really. If you see right from Industrial Revolution, when steam engine came and everything, all of those, innovations happened, it used to be England and France. The Industrial Revolution and all, it was all England and France, right? Till the World War, it was always Europe which was the richest. But after Second World War, US actually became a superpower, correct? So the question is simple, that if Mr. Buffett was born in 1930 itself, like he is born, but instead of US, if he was born in Kenya, Bangladesh or Afghanistan, you would not know him as Mr. Buffett, correct? And if he was born in US, but instead of 1930, if he was born in 1830, you would not know him as Mr. Buffett, correct? So for everybody, you may perform in a certain field, but where you are performing and when you are performing, it matters a lot, correct? And by the way, this is not just about Mr. Buffett. And by the way, why did I say this is similarity between you and him, which is right place, right time? I'll explain that to you later. But there's a very famous author called Malcolm Gladwell. He has done research, and he's written a book called Outliers. Has anybody read that book by any chance? In that book, you know what he says. I'll give you few. I'll tell you about few things which will be surprising for you. You know that in the US, basketball is like a big craze, right? They have this National Basketball Association and they have those events, tournaments. Did you know that most successful basketball players are born in the month of January? It's a fact. Most of the successful basketball players, they were born in the month of January. Why do you think it would be that way? The reason is because in India we follow a academic year which is probably June to July. The academic year starts in June, correct? So people who are born till about April, May, they'll be absorbed when the academic year starts. But if you're born in August, September, October, then you wait for the next cycle because you are maybe a few months behind. In US, they don't follow June, they follow January to December. The academic year is the calendar year typically. So what they do is that, and obviously as per the class, the basketball teams will be formed. So from the time kids are 5 years, 6 years old, they start playing basketball. And in every class, there will be a team which will be selected. Now the key point is that even if you're 6 years old, the kid born in January will be say 6 years old. But the kid born in December might be 5 years and 1 month or something like that. Correct? Now for a 5-year-old, 6-year-old kid, 10 months or 11 months is huge difference in terms of strength and height and abilities. So in every class, the best performer will be the one in January because they are the ones who have a 10-11 months advantage vis-a-vis the other kids in the class. So what happens is that all the people who are born in January and February, they keep getting picked up. So that is how their progression actually happens. And ultimately, most of the best players are the ones who were born in January and February because most people in the team itself are born in January or February. Correct? Then did you know, for example, that the richest technology entrepreneurs, whether it is Bill Gates, whether it is Steve Ballmer, Larry Ellison, all of these people, right? Steve Jobs, there are multiple such famous entrepreneurs, right? Do you know what is common between all those entrepreneurs? They all were born in the 1950s, they all studied computer science and all studied computer science on the west coast of US. Then in India, you hear of, when you read Economic Times, when you check on the internet, you hear of many, many successful and many, many famous stockbrokers, investors, all these people, right? In India also, there are many, many famous investors and stockbrokers. You must have read about all of them, like whether it is Ramesh Damani, Radhakishan Damani, Rakesh Jhunjhunwala, Ramdev Agarwal, all these people. Have you heard about them? You must have read, right? What is common amongst all these people? Does anybody know what is common amongst all these people? They all started in India's stock market between 1985 to 1990. All of them, each one of them. Maybe 1990 can become 1991, but all of them started at that point. So basically, it's very well known that at a particular point in time, at a particular place, there is an opportunity for something to be built or executed. 10-20 years early, 10-20 years later, at the same place, at the same time, those opportunities will not exist. And at a particular point in time, at a particular place in time, to execute something, the right environment or the right confluence of factors takes place. But if you try the same thing 10 years later or 10 years earlier, then all those factors and all the confluence of those factors may not actually be there or it may not work. So let's go back here, and I was asking you what is common between you and Mr. Buffett, and the thing which is common is being at the right place at the right time. Okay, but most important thing which I want to tell you is whenever somebody says that you are at the right place at the right time, the immediate conjecture or immediate conclusion might be, okay, so you are saying that the person is lucky. Is right place, right time all about being lucky? What do you think? Sir, you want to? No, sir, you have to give answer yes or no. Is right place and right time enough?
May not.
Okay, so that is why I put a hint here. I don't know if does anybody watch Hindi movies here? You like to watch Hindi movies? There was one, like, an iconic movie called Hera Fairy, right? And in that, the most iconic role is of Paresh Rawal. It's called Babu Bhaiya. Do you know what Akshay Kumar told Paresh Rawal about luck in the movie? You know that in Hindu religion, Hindu culture or mythology, Lakshmi ji is the goddess of wealth. Correct? So do you remember that dialogue, what he said, what Akshay Kumar said about money, about luck? So he is actually talking to Paresh Rawal about capitalizing on some opportunity. And Paresh Rawal tells him, no, we cannot do it. Because if you see, the whole movie is about them trying to get rich quickly. Correct? And then Paresh Rawal says for something that he'll not cooperate, he'll not do what Akshay Kumar is saying. So what is Akshay Kumar's retort, He says that लक्ष्मी जी आपको तिलक लगाने आ रही है और आप मुंह धोने की बातें कर रहे हो, मुंह धोने जा रहे हो. So it's very well known that being at the right place at the right time, yes, you can say that you're lucky, but your luck will not work if you're not caught doing the right things. So being at the right place at the right time is not enough. You need to be doing the right things at that time. So even if you think that being at the right place at the right time is you are very lucky और लक्ष्मी जी आके आपको तिलक लगाने वाली है, लेकिन अनफॉर्चुनेटली तभी अगर आप मुंह धोने गए हो तो आपको तिलक नहीं लगाया जाएगा. That is the thing. So even if you're at the right place at the right time, you need to be seen to be doing the right things. That is very important. So all the examples I gave you, I said that most of India's successful investors, they entered in the stock market between 1985 to 1990, right? But there was Harshad Mehta scam and there was Ketan Parekh scam. And if all these people, they made money but they lost a lot of money. So if all these people had scooted, they would not be successful, right? I'm quite sure that whether it is Steve Jobs or Bill Gates, I'm quite sure that at some point in time they must have found their studies very difficult. But if they had quit, then they wouldn't have become, the biggest of software investors. And Mr. Buffett was actually born when America was amidst the biggest depression or the biggest recession. Correct? So he might have, and the stock market, in his early life, stock market was absolutely in doldrums, but still he became a successful stock. I mean, see, if you have seen stock market booming for 20 years and you become a stock market investor, that is one thing. But if you're born amidst the Great Depression and for the first 15 years of life, all you see is depression, economic distress and World War, and still you become a successful investor, that's a very different thing, right? So there are not many people like him. And that is why being at the right place at the right time, you are lucky, but it's not enough. You have to still do the right things. So why am I giving you all of this background? Now, if you see the government in India, it is only incidental that it's the Prime Minister's photograph, but these are all government pronouncements. If you see in India, last 1 year, whenever Independence Day, Republic Day, the government, and on behalf of the government, the Prime Minister seems to be saying that India ka Amrit Kal aa gaya, meaning a golden period, next 25 years. These kind of statements are being made, right? It's being said again and again, and then, these kind of paths are laid out. Now, what I want to tell you is, when big people, when very, very powerful people, when big politicians, chief ministers, prime ministers, when they make certain large pronouncements, there is one unfortunate negative to it, that it gets taken as political statement or a propaganda, correct? But the reality is that this is actually not a propaganda. It is bound in absolute arithmetic and absolute science, right? So what is the reason why I'm saying that people who are investing today, why am I saying that they are at the right place at the right time? I'm not saying that all of us are going to become Mr. Buffett, because to become Mr. Buffett, first you need to invest for 50, 60 years, correct? There are many people in this room who can invest for next 50, 60 years, but I'll show you that even 10 years can actually change things quite dramatically, right? So why are we saying that these are not political statements or slogans, and what is the reason? See, what this chart actually tells you, let me just highlight something for you. If you see on the top where I put the red marker, it tells you what was the population in 1973, 50 years back. 50 years back, China was 88 crore people. We were 59 crore people. and then you can see United States and multiple others. This year, after a big long race for 50 years, we have overtaken China actually, right? And now we have more people than China. So this year, India and China both are approximately 143 crore people. And somewhere in this year, we have overtaken China's population. Because obviously since 42, 43 years, China has one child policy, right? And India doesn't have that policy. We suggest 2 kids, but we don't enforce anything. And for the longest point in time, it was thought to be a big negative, correct? But, the world, you can come this side, please. So for the longest point in time, having a large population was thought to be a very, very, just be mindful of the wire. So few things you should know, why am I talking about population and why people are realizing that having a large population is not necessarily a bad thing, correct? Few things you should understand about investing and how it is related to population, productivity, etc., etc. So what is happening in China, not only have we overtaken China's population, but the fact is that they are actually becoming old. And see, China is the biggest country in the world in terms of population, and the second biggest country in the world in terms of the economy, the size of the economy, correct? Now, why is this important or why is it relevant? So first is that their population is going to start declining at some point in time. And more important is that populations are always broken into 3 parts. There are kids, there are adults, and there are old people, correct? Now, kids obviously don't produce anything and they consume very limited stuff. So you can imagine that kids don't contribute to economic activity, other than consuming maybe educational services, but that also is paid for by the parents, right? So kids actually don't contribute to the economy other than consuming few things, and they don't produce anything. If you see old people, to the extent that a lot of old people are entrepreneurs or businessmen, they continue to participate in the economy. But by and large, 90-95% of the old people, once they have finished their careers, and they are working, they are retired, and they are sustaining based on a retirement corpus. So obviously they will not contribute much to the economic activity, and they will consume also limited things and a different set of things. But the maximum contribution to the economy comes from people who are adults. By and large, people who are between 20 years and say 60-65 years of age, they are the ones who will produce as well as consume. So bulk of the economic activity in any country is determined by how many people are 15-20 years of age up to 60-65 years of age. That will determine what is the kind of vibrancy in any economy, right? So what is happening, the biggest problem for the world today is that the richest countries in the world and the countries which contribute the most to the economy are all going older, okay? And I'll show you what I mean by all are growing older. See, what is this chart showing? This red line is China, okay? And this is 2015. You can see here that after 2015, there is almost like a precipitous decline in the working age population. So working age population is this adult population which I was telling you about. So what is happening in China is that in the next 30-40 years, 20-30 years, the working age population is going to see a massive decline in proportion, correct? Then if you see, this blue line is Europe. They have also started seeing a big decline, and it will continue to decline all the way here. The grey line is US. In US also there is a decline, but I think after 15-20 years, they will actually stabilize. That is your kids and grandkids. You understand that? You understand why US is inviting students, right? So their population will stabilize because of your kids and grandkids. Otherwise, on their own, it is not going to stabilize. That is why they are actually getting students. But the only line which is going up is the orange line. So what it says, for the foreseeable future in India, the working age population will continue to keep rising. Now, if you look at it this way, I mentioned that the people who are between 20 and 60 or roughly 15 and 60 or 65, they are the ones obviously who are the biggest consumer and the biggest labor force, correct? Now, when you talk about investing, how is all of this relevant for investing? There are a few simple English statements I have made without any graphs and charts. So I'll explain to them one by one. So first thing, returns are always made on growth. We discussed about saving and investing, right? Something which does not grow means it is not giving you returns. And something which keeps your money as is basically saving. So returns are always made on growth. Anybody who is a businessman or an accountant or somebody who understands finance, I'll give you a simple example. If a company has a sales turnover of 100 crores, let's say a company does business of 100 crores in a year, and based on some margin, they make 20 crore profit every year. Now, if every year they are going to sell 100 crore worth of goods and every year they are going to make 20 crore of profit, the value of that company will remain constant. The value of the company will go up only if 100 crore turnover becomes 110 crore and the 20 crore profit or 15 crore profit becomes 25 or 30. So returns, and even if you see in the stock market, right, if you read anything about the equity market or the stock market, you will see that companies declare their results every 3 months. And when they declare their results every 3 months, what are people waiting for? To see how much is the sales going up and how much is the profit going up. Why does everybody watch how much profit is going up? Because the value of the investment, that is the value of the company, and hence the value of the shares that you are holding, it goes up only if the profit and the sales goes up. Okay, so it's understood that returns are only made on growth. Now, whether it is a company or a country, growth is always a function of how many people are there and how productive they are. Is it clear? Sir, if there is something not clear or if it is something complicated, then definitely point out. So growth is always a function of population and productivity of the population. How to grow population, we all know. How to grow productivity? Productivity grows based on few things. What is the level of education? What type of telecommunication networks you have? Are you still sending letters to each other or you can send WhatsApp? Right? So productivity depends on education, it depends on telecom network, it depends on infrastructure like ports, railways, roads, airports. It depends on whether you are going to pay octroi at every state border or you have a GST all over the country, which is uniform in nature. Right? There are many technology investment, whether you are still using human beings to take hand carts or whether you are using proper trucks, right? So there are many things which can be done to improve productivity. But what is the one condition? First, you need people. If you don't have people, there is a limit to how much productivity you can actually, right? So for example, take Japan. In Japan, 33% of the people are above 65 years of age. Now, if 33% of the people are above 65 years of age, how can they improve the productivity of those people? They can say that instead of 65, you will retire at 85. Right? They can say that if we want 100% of the women also to be working, we cannot have the economy where only men are working. So we want all the women to also work. We will not have any low-skilled, high labor-intensive jobs. We will only have managerial and technology-driven jobs. So all this is theory. You know that 100% of the men and women is witnessing declining population. Recently in France, there was a proposal that retirement age should be moved from 60 to 65. Bagawat ho gaya udhar. There was a revolt. They did not allow it to be done. Why do you think the French government was trying to increase the retirement age? For a simple reason, two reasons. One is that if people retire later, then the pensions will be called upon later. But more importantly, if people retire later, then the productivity is preserved. If people retire early, then the productivity of the economy will actually go down. So you understand that growth is always a function of people multiplied by productivity. So now you can imagine where is maximum number of people. Now it is in our country. So where can people invest to improve the productivity? You can invest to improve productivity only if there are people there. Correct? If 33% of the people are above 65, then how much can you invest and how much can you improve the productivity? So now you can see why the government is giving $32 billion to get production linked incentives. You know that the government is putting a lot of effort to get all types of factories to come back, or for all kinds of industries to be set up in India. And people are responding also. And if you read the newspaper, everybody says that, factories are moving out of China, they are going to India, they are going to Vietnam. Why that is happening now? Most people think it is because of COVID. Some people think it is because US and China don't have good relations anymore. All these things are just occurrences or incidences. The reality is that whether there was COVID or no COVID, whether US and China had relation or no relation, the fact is that in a country, if population declines, you talk about the economy of the world, when you talk about growth in the world, why people talk only about US and China, and nowadays why people are talking about India? Because not only there is growth, but growth is coming at large scale. So let me give you examples. Do you know that in any given, in a good year, the world's GDP, gross domestic product, which is the economic indicator. So you just say that the annual production or annual output for the whole world in any given year is $95 trillion, say roughly $90 trillion. Okay, and I mentioned that investment is made where there is growth, returns are made where there is growth. So 90 trillion, that is the GDP of the whole world. Do you know how much it grows in any year? If it is a good year where the economy of the world is performing well. Like for example, in Goa, when does the economy perform well? When there is a great tourist season, when mining resumes, when all these things happen, then Goa's economy does extremely well, correct? The same way, what you apply to your state, it applies at a global level. So $90 trillion is the GDP of the world. In a year, the GDP of the world would grow by 2 to 3%. I mentioned that returns are made on growth. So you have to see how much does this grow, that is what will generate the returns. So 90 trillion GDP grows 2 to 3% in a year. But where will people invest? So for that you have to see कि 90 trillion में अगर 2 to 3% का growth है, तो world का incremental output will be 2.5 trillion roughly speaking. If 90 trillion grows by 3%, the incremental production in the whole world will be $2.5 trillion, right? Who contributes this growth? Who grows the most? Which are the biggest countries? So out of 90 trillion of the world's GDP, 22 trillion is only US alone. It's the biggest by a mile. It's more than 25% of the whole world. Okay? Despite being 22 trillion in size, before COVID, that's the latest example you can take. In 2019, the GDP of US grew 3.5%. So now just put 22 trillion, if it grows 3.5%, it means that their incremental production was $700 billion. China was $16 trillion, they grew 6%. On 16 trillion, if you grow 6%, means you have added how much? Kitna izafa hua? 1 trillion extra. Now just think, the whole world has grown by 2.5 trillion. Out of 2.5 trillion, 1 trillion comes from China and 0.7 trillion or 700 billion comes from US. So if the world has grown 2.5 trillion, out of that 1.7 trillion, which is 65% of the world's incremental growth, only came from two countries, only US and China. So now you know why they are the most prosperous, why everybody invests in China and US, why all factories are there, why they are the biggest part of the world. That is because not only they are growing, but they are growing on a very, very large scale. See, 22 trillion GDP, if it grows 3.5%, you should imagine it is like a 100-ton truck which is speeding at 100 kilometers per hour. That is how it should be visualized. What was India's growth before COVID? Our GDP was only $2.5 trillion. And so we were like say 2-3% of the world. On 2.5 trillion, we grew at 3.7%. So out of the world's additional production of 2.5 trillion, our contribution was 100 billion, which is 0.1 trillion. So we are 16% of the world population, but we contributed only 3 or 4% of the world's GDP. This was till 2019. Now anybody who reads Times of India, Economic Times, can you tell me how much of the world's growth India is contributing in 2022? Take a guess. In 2019, our contribution was 3 to 4%. Now you can see that factories are being set up, people are wanting to invest. Apple has started making phones in India. Samsung has started making phones in India. Everybody wants to make electric batteries, blah blah blah. Everything they want to be done. Suddenly we have become a big investment destination, right? What percentage of the world's growth has India contributed in 2022? In 2019, it was 3 to 4%. Take a guess. This year, how much we are contributing? 7% is our growth, meaning we are so it's an important number. We are 3.7 trillion GDP. On 3.7 trillion GDP, we are expected to grow 7%, which means almost 300 billion or 0.3 trillion is our growth increase. So we are going to contribute 300 billion additional. But how much is the world going to grow this year? It is not going to grow 2.5 trillion. The world will grow 1.5 or 1.7 trillion. So now you calculate how much of the world's growth has come only from India. It's more than 20%. More than 20% of the entire world's growth has come only from India. You know why I said growth is not enough? It is relevant only at scale. Why did I say that? Because if you are Pakistan and you grow even 20%, it doesn't matter. Because their GDP is approximately 300 billion. तो जितना इंडिया में एक साल में इंक्रीमेंटल हुआ, उतना पाकिस्तान का टोटल जीडीपी है. तो हम अपना जीडीपी में एक पाकिस्तान अब भी ऐड कर दिया. So Pakistan's GDP is only 300 billion. If they grow 20%, they will add 60 billion. That 60 billion is 1/5 of our growth. We are adding what we are adding every year. That is their total itself, right? So you understand that growth is important in any economy. Growth is very important for people to make returns. But to become a big investment destination, for becoming the cynosure of the world's eyes, you need to have growth at scale. Only then you will attract a lot of investment. And that is the reason why all those big things that are being said, next 20 years is our Amrit Kal, etc., they are not slogans. That is the reality that for the foreseeable future, next 10, 15, 20 years, we will be the biggest consumer market, biggest labor market, the biggest investment destination in the world, and also the biggest contributor. I mean, of course, US is the largest, but if not the biggest, we will at least be the second or third biggest contributor to the growth of the world for the next 10, 15, 20 years. And that is purely because we have the highest number of people who are of a working age. So only where you have people of working age, you can invest and you can enhance the productivity. You know, that is the reason why the world has always grown one country or one region at a time. Like I told you, before the World War, the entire growth of the world was contributed by countries like England and France. After World War, large part of it was contributed by countries like US. After that, it was Japan and Germany. Last 15 years, it was China. Now, the problem is that when countries become rich and prosperous, they stop growing the population. That is one of the key things to keep in mind. And US is a very unique country, because they don't let their population to go down and they don't let their productivity to go down, because they are the mecca of all innovation and all technology, right? And they allow immigration because it's a country of immigrants. There was no, the local, local Americans, what they, 300 years, 400 years, that's very different. Whereas everybody else has just been immigrants. The people who are running America today are immigrants, right? So that's why they are prospering. But do you foresee your kids or grandkids immigrating to China, Taiwan, South Korea, Japan, Italy, Spain, Germany? No, they are very insular. They don't facilitate immigration, right? So the countries which have the highest working age population and the highest productivity of that population, they are the ones which contribute to the growth. Now, why did I give you all this background and why did I start by saying right place, right time? Because these 20, 30 years come in the lifetime of a country or a population only once. The maximum prosperity, see in last 15 years, we are today where China was in 2007. What is that juncture? $3.5 trillion economy and $2,500 per capita income. Do you know in last 15 years, China has gone from $2,500 per capita income to about $12,000 to $13,000 per capita income. What is per capita income? You understand, right? It is basically how much is your annual GDP, you divide it by the number of people. When a country starts growing, the per capita income also grows. So in the next 10 to 15 years, India will become from lower middle income to middle income country. Today we are classified as a lower middle class country. Goa is one of the richest state, so it's different. I'll explain that information to you. Goa is actually Goa, Sikkim, Chandigarh. These are that there is lot of that is why you can see I started by telling you what was advertised on TV 15 years back and what is advertised on TV today. What is aspirational and what more number of people can afford is what will get actually advertised. That is the thing to keep in mind. So this is what I was telling you. India will be largest contributor to world's growth, so we will attract investment. So India will be the biggest consumer market, labor market, and the highest growth investment destination for the foreseeable future. I already explained this chart to you, right? Now, do you know what it means when I said that we'll become from lower middle income to middle income or middle class country? Has anybody played these video games like Prince of Persia and all these video games you have seen? Anybody can relate to it? When you play a video game, what happens? If you keep playing, you become a better and better player. Correct. Then more tools and weapons open up for you to play better. Obviously, the game becomes challenging and it becomes faster, but at the same time, more and more tools and weapons keep opening up. This per capita income is exactly like that. Because in any country, as the per capita income of people starts rising, more and more sectors become bigger and bigger. So what this says, India was $2,000 per capita income a couple of years back. Now we are $2,400 per capita income. And thankfully, the population doesn't grow as much as the GDP. So if you see, our GDP grows 7%, but the number of people in the country, it grows by 0.7 or 0.8% every year. Which means that if your GDP rises, per capita income will rise much more faster because the number of people is not growing as much as the economy or the productivity of the country. So let us say that now we are $3.5 trillion GDP, we will become 7 trillion in the next 10, 12 years. So per capita income will not go from 2,500 to 5,000, it will go more like 6,000, 7,000 or maybe at a higher pace. Now the good part is, India is not the only country which has gone from lower middle class to middle class. There are many countries like China, Thailand, Brazil, South Africa. Even Vietnam is richer than us on a per individual basis. So what does this show? The experience of the world shows that when a country, see what is this saying? Years of economic progress, and on top it says per capita GDP. So what it tells you is that when a country touches $5,000 per capita income, that is when mobility, retailing, real estate, they become big sectors. Because when you reach $5,000 per capita income, that means more number of people will be able to afford vehicles. Again, sitting in Goa, you may not realize because I am told that in Goa, the population of vehicles is more than people. Correct? But that's not true for India as a country. For India as a country, we will have more vehicles and automobile as a sector will grow only when from 2,500 we go to $4,000, $5,000 per capita income. Correct. Now I'll give you another example. 10, 15 years back, what type of brands were available all over the country, and today, what type of brands are available all over the country, you can see the difference. 10-15 years back, if you see the stock market, the only shoe company that was listed was Bata, right? Now you know that there is Metro, Relaxo, Campus Activewear. How many are getting listed? 10-15 years back, no apparel companies were listed. There was no apparel companies or companies which make clothes. They were not listed in the stock market. Now you see all this Manyavar, Aditya Birla Fashions, all of it is getting listed. Do you know all the fashion designers in India have been bought up by either Reliance or Birla? And why do you think that now is it that apparel companies are getting material size? Because people's per capita income is actually rising. The affordability is rising. You may not see it in front of you, but if you see the trends, that's why I said always keep an eye on what is getting advertised on TV and what is getting listed in the stock market. That will always tell you what are people actually doing in the, what is the priority of the people and what is actually growing. So what it means is with rising per capita income, consumption can grow meaningfully. What is the reason for this? It's very simple. Let us say that per capita income is $2,000, which means on an average per person, the income is say 1,50,000 rupees, right? You can imagine that for any person out of $2,000, let's say $1,500 is the cost of roti kapda makan. Now let's say in 5-10 years, 2,000 becomes 5,000. So obviously cost of roti kapda makan will not grow as much as the income. So when you're $2,000, let us say $1,500 is the cost of roti kapda makan. But when you go to $5,000, cost of roti kapda makan will be say 3,000. So when you were at 2,000, you had $500 surplus. When you are at 5,000, you will have $2,000 surplus. Because the cost of sustenance doesn't rise as much as the income of the people. So the most important thing is that as a country goes from lower middle class to middle class, you know what changes the most? People's ability to consume. That is what. When a country goes from lower middle class to middle class, the first priority of people is to look better and to live better. So it will always result in more consumption of different types of apparels, beauty products, footwear, and different types of food items. That is why 10 years back nobody was advertising Domino's Pizza. Now they are advertising Domino's Pizza. If you remember 10-15 years back, people were advertising only biscuits, like Britannia Tiger. Now they are not concerned how many people are eating Tiger biscuit. Now they are only concerned that all the people who are eating Tiger biscuit, how many of them have moved on to eating bourbon. That is the change which actually happens, right? Previously, cheap liquor, those were the companies which were being observed. Today even Black Label is listed. United Spirits also is listed now, correct? So these are the things which change when a country becomes. Now why am I giving you all this background? The reason for giving all this background is if you are a saver, like Dr. Selso said, if you are a saver and you put all your money in the bank, you are saving. If you are working, you're a business person, you're a professional, you're working in a bank, whatever you're doing, you are contributing to the economy. But how do you participate in all this? What is the way to participate in all this? The only way to participate in all this is to be an investor. Because you cannot set up a Domino's Pizza. But I hope you know Domino's Pizza is listed. And you can be a partner or a shareholder if you want to enjoy the growth. So you can eat pizza. If you eat pizza, you will contribute to the people who are shareholders of Domino's. But if you want to eat also and you want to participate also, then you have to be a shareholder, correct? Let me give you a different example. Let's say you put your money in the bank. Okay, at what rate? If you put money in the bank, at what rate they pay you for the FD? 7%. If you go to borrow from the bank, what rate they charge you? 9, 10, 11. Correct. Now I'll give you a simple example. Let us say that I am a CEO of a bank. Okay. At the end of the year, I have come to declare my results, that how did my bank perform. Okay. I come and tell you that last year was a fantastic year for us because on an average we paid 7% on the deposits, but on an average we were able to collect 11% on the loans. Hmm? And because of that, our profitability has gone up by a big, wide margin. You are sitting in the audience. If you are a shareholder of the bank, how will you feel? You feel very nice. If you are a depositor of the bank, how will you feel? You will feel ना हमारा पैसा से दिवाली कर रहा है. Right? So contributing is always different from participating. So all this fancy presentation that I showed to you, you all are contributing to it. But how are you participating in it? The only way to participate is to be an investor. If you are saving, see, if you do your job, if you conduct your business, if you do service, you are contributing to all this growth. Correct? But contributing is one thing. How do you participate? Today, you know how is India's stock market? There are more foreigners who are earning or who are benefiting from our growth than what we are benefiting. There is a clear arithmetic to this. All of this, what I'm saying, is reflected in the wealth of the stock market, correct? Because ownership is manifested in the stock market. If you have a bank account in HDFC Bank, you are not owner of the bank. But if you have 1 share or 10 shares or 100 shares, then you are part owner of the bank. So all the ownership and the creation of wealth is manifested by who owns the companies in the stock market, correct? Now, do you know out of the total value of our stock market, 50% is owned by the owners of those companies. Government is also owner. So 50% of the stock market wealth. So if you see Reliance Industries, 43% of Reliance Industries is owned by Mr. Ambani and his family. Correct? Same way, if you see all the entire stock market, 50% is still with the entrepreneurs or the founders or the promoters of the business. तो कितना बच गया स्टॉक मार्केट? 50%. वो जो 50% है उसमें से 21% फॉरेनर्स का है. हम लोग CNBC और इकोनॉमिक टाइम्स देखते हैं तो आता ना FPI, FII, whoever follows might be knowing. So out of 50, 21% is owned by foreigners. So 71% out हो गया. Insurance companies own 8%. LIC and private insurance owns 8%. बट उसमें अगर आपका पार्टिसिपेटिंग पॉलिसी है तो आपको कुछ मिलेगा, अगर आपका टर्म प्लान वगैरह है तो आपको कुछ नहीं मिलेगा. सो 71 plus 8, 79, correct? Then you will have all the some government agencies and pension funds and all those kind of things. Do you know the sad part? You own the stock market through mutual funds, that is 7% of the market, and directly through their demat accounts and trading accounts, people own about 9-10%. So today, the owners of companies and the government of India and the foreigners, they are the biggest participants in the growth. You all are the biggest contributors to the growth. The owners of the businesses and the government and the foreigners, you are the biggest contributor, they are the biggest participant. Participant meaning biggest beneficiary of the growth. So now the question is whether you are only going to contribute, you are also going to participate. That is the important thing why I am telling you all this. Now what is the best way, like Dr. Celso mentioned, that we have to do this small is powerful. That all has been visualized purely because that is the way to participate in the growth. Because if you don't participate in the growth, then you will only keep observing that India has become a middle class country, rich country, blah, 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 but you will not benefit out of it, right? So this is the reason why, see, out of our total wealth as a country, all Indians put together, only 5% is in the stock market. 3.5% is cash, 6% is pension funds and provident funds, 6% is insurance policies, 15% of the wealth is lying in bank deposits, 15% is lying in gold, and bulk of it is lying in property. Now, other than equity, none of the other things gives you any participation in the growth of the economy. So if India becomes rich, you will get, only 5% of Indian people's wealth is dedicated towards becoming wealthy in the future. Rest of it is only to allow other people to become rich. That is the thing to keep in mind. And the good part is it has started increasing only now. Now it has started increasing. See, by the way, per capita income is also related to how much people will put in the stock market, because if your per capita income rises and your spend of roti kapda makan doesn't go up, then your risk taking ability and your ability to save also goes up. Okay. How much people have started putting money in the stock market or equity mutual funds through SIP? In last 5 to 6 years, it has gone up 4 times. So this is gathering acceptance and gathering pace now. Every month, Indian people, every month, they put 13,000 crores, 12,976 crores. Every month, Indian people put 13,000 crores in equity mutual funds as a systematic investment, meaning it is something which is, it has already been registered, and every month that much money gets debited from the bank and gets invested in the, it's like a EMI, right? When you buy a house, you pay EMI. When you buy a car, you pay EMI. So the EMI you do for your future wealth, that is different way to call that is SIP, right? Systematic investment. And how, why does it say small is powerful? You know, there are a few illustrations that I'm going to share with you. So how does this actually work? Just look at it this way. Hang on. So how does this actually work? Just look at it this way. That if you actually assume, you know that the stock market in India, for example, I mentioned to you that, you know, the participation is only rising now. Otherwise, people haven't been investing too much. And only 5% of the wealth is invested. Do you know that in the last 30 years, if you just take Sensex for example, in the last 30 years, India's stock market has grown 12% compounded year on year. So I'll give you an example. It means that forget buying any shares or forget buying any equity mutual fund. In 1991, if you had put, let us say, 1 lakh rupees into stock market, let's say just buy 1 lakh rupees also how? You see what is the Sensex? You know Sensex has 30 companies, Nifty has 50 companies. Are you aware of Sensex and Nifty? Everybody's aware. So Sensex has 30 companies. In 1991, if you put 1 lakh rupees to just buy 30 companies of the Sensex and hold it in the same proportion as is there time to time in the Sensex, it has grown 12% compounded year on year for the last 30 years. Do you know what that 30 years year on year 12%, you know what it means? There is a simple rule of arithmetic. If something is growing 12% every year, it means in 6 years it will double. So anybody who is investing should know one thing which is called rule of 72. Is everybody familiar with it? Have you heard of this? You know what is rule of 72? If you divide the percentage return, 72, you divide by the percentage return, it will tell you in how many years the money will double. So if I told you that Sensex has grown 12% year on year, 72 divided by 12 is 6. It means every 6 years money doubles. If I tell you that every 6 years money doubles, so 72 divided by 6 is 12%. So if I tell you in how many years money will double, then you can calculate percentage return. And if I tell you percentage return, you can calculate in how many years money will double. How much is your saving account paying you? Saving bank. 3 to 4%. 4%. Do you know if it is paying you 4%, that means in how many years it will double your money?
24.
72 divided by 4 is 18 years. It will double money in 18 years. If you put money in the stock market, last 30 years, Sensex, so let's calculate. 30 years back, if you put money in the saving account and leave it in the saving account. Okay, it is 4%. It doubles in 18 years. So in 1991, if you put 1 lakh, after 18 years, which is in 2009, 1 lakh will become 2 lakh. From 2009 to 2022, 18 years, 2 lakh should become 4 lakhs, correct? But 18 years हुआ नहीं है. 2009 के बाद 18 years कभी होएगा? 2027 में. अभी हम 2022 में है, तो 2 का 4 नहीं हुआ है, आप समझो 3.5 लाख हो गया होगा. So in 30 years, if you left money in the saving bank, 1 lakh would have become, say, 3.5 lakhs. Now, if it was in Sensex, what would it be? I said it has already, and I'm not giving you some future projection. I'm telling you reality which has already happened. In 30 years, it has grown 12%, which means it will double not in 18 years, it will double every 6 years. So 1991, it is 1 lakh. In 1997, it becomes 2 lakhs. In 2003, it becomes 4 lakhs. In 2009, it has become 8 lakhs. In 2015, it has become 16 lakhs. In 2021, it has become 32 lakhs. 10 times of the. Now you can say, अरे, the return rate का difference 3 time है. एक का 12%, एक का 4%. तो rate का difference only 3 time है. लेकिन investment का difference 10 times हो गया. ऐसा कैसे हो गया? Because of compounding. Because it is 12% year on year. So 100 becomes 112, and 112 will become 126 or 127, whatever the number is. Correct? So now, this is how things have played out. If you invest 5,000 rupees per month, okay, so what we have done, we have not assumed any 12% here. It's a simple arithmetic. Assume only 10%. Okay. In the longer term, stock market has delivered more than 12%. And instead of the index, if you have bought good company shares, which is difficult to identify what is good, but you just buy a mutual fund. Mutual funds have grown at 15 to 16%. Okay, but we are not taking 12%, we are not taking 15-16%. Let us assume that you assume a return of only 10%. Okay, and then you put 5,000 per month. Now, the blue bar is for 5 years. Let's say the first assumption is 5 years. So for 5 years, if you put 5,000 per month, how much you put? 3 lakhs. Because 5,000 per month is 60,000, and 5 years it is, your contribution is 3 lakhs. At the end of the 5th year, so through that 5 years, it is growing at 10% year on year. Even while you are putting money, it is growing at 10%. So in 5 years, you have put 3 lakhs, but at the end of 5 years, the value would be 3.9 lakhs. You can see this here. First one. Now, instead of 5 years, if you put for 15 years, your contribution is 9 lakhs. Correct? If you put for 15 years, your contribution is 9 lakhs. But the value would have grown to 20.9 lakhs. Yeah, sure. You can see here that if you put 5,000 for 15 years, that means you put 60,000 per year. In 15 years, you put 9 lakhs. Through the interim period, if it keeps compounding 10%, the value of your 9 lakhs would be almost 21 lakhs. Instead of 15 years, you invest for 25 years. So in 25 years, how much you put? 60,000 per year. 25 years, you put 15 lakhs. The value of the 15 lakhs would be almost 67 lakhs. So this is what? Now, instead of 10%, I have changed it here to 12%. Now see, 10 का 12 होगा, तो 67 lakhs का value हो जाता है 95 lakhs. So two things you have to keep in mind. The numbers are changing disproportionately with passage of time. See, that is why you can see here that none of this is proportionate. It's not like 25,000 5 years के बदले 15 years करेगा, तो the bar is not going up 3 times. The bar is actually going up lot more. Correct? So the value of the investment changes disproportionately with how long you commit. And the value of the investment changes disproportionately with every 1% change of the return. So, why is it saying small is powerful? The reason is because a lot of times when people have to invest, they think, let me accumulate some money, then I will invest. Actually, it's not important to accumulate money and then invest. Whatever you have, you start investing, because with passage of time and with even 1% of higher return, the outcome is what we call non-linear. You know, anybody who studies arithmetic, you study geometric progression. See, what is arithmetic progression? 2, 4, 6, 8, 10, 12. That is arithmetic progression. But 2, 4, 8, 16, 32, 64, 128. That is geometric progression. Wealth always grows in the stock market because stock market is geometric progression. Your saving bank cannot be geometric progression because it will always grow as 2, 4, 6, 8, 10, 12. But to create wealth, you cannot go 2, 4, 6, 8, 10, 12. For creating wealth, you have to go 2, 4, 8, 16, 32, 64, 128. That is the difference, correct? So you can see clearly that as the time passes, the value rises disproportionately. And as even 1% or 2% change of return, the value changes disproportionately, right? This is why two things I have told you till now. I've spoken to you for a long time. One thing is that it is not enough to contribute to the growth of the economy. If you're working, if you're saving, you're contributing to the growth. What is important word is not contribution. It is important to contribute. It is more important to participate or benefit out of the. So doing your saving and doing your job and doing your business is good to contribute, but the only way to participate is to be an owner in the stock market. The best way to do it is obviously to buy mutual funds which invest in equity. But how to invest in equity? Most people actually think that they have to accumulate a lot of wealth, then they will start. Do you know the minimum? What is the minimum monthly investment in an equity mutual fund? Does anybody know? Most of our funds take 500, but there are some funds which take 100. And do you know now there is a fund which takes 10 rupees? So it's not, you're not supposed to, you cannot say, you don't need to say, let me first collect lakhs of rupees, then I will start. They have to make it lakhs. You can start with hundreds and thousands. If you start with hundreds and thousands and stay committed, it will become lakhs. If you wait for it to become lakhs and then you think you will make it crores, that time will never come. So for making wealth in the stock market, you don't need brilliant people. You don't need very, very intelligent people. You need patient people and you need disciplined people. See, this will only happen if people are patient and disciplined. This has already played out. No? Last 30 years, Sensex has grown by 12%. I am not even telling you some good mutual fund or some good stock. The whole Sensex has compounded 12% in last 30 years. So people who have done this have already benefited. All those people were not brilliant people. They were only patient and disciplined. Right? It doesn't need brilliance. It needs patience and it needs discipline. That is the important thing. Now, the last part. You know that the stock market keeps going up and down. So what will happen is, in the previous chart, I was telling you that you put 5,000 every month, it becomes 60,000 per year. Okay, this chart here. If you put 5,000 every month, 60,000. In 5 years, 3 lakhs. If it has grown at 10%, value of 3 lakhs is 3.9 lakhs. But you know how the stock market works. The first year you put 60,000, let's say the value becomes 65,000. Next year, the starting value is 65,000, you keep putting 5,000, it is say 1,25,000. If stock market goes down, 1,25,000 can be even 1 lakh, right? So people get scared. Oh, what is this guy saying? He was saying if you put for 5 years, this is what happens. But now as only second year has come and then the stock market has fallen and, you know, forget going up, the value has come down, right? Now, you know, when you do this SIP, the time when the value comes down, you actually benefit more. See like this, see. If the value goes up like this, 10, 13, 16, 19, this is the NAV of the fund, okay, value of the fund. If the value of the fund keeps rising, then every month you put 5,000, it is being put at a higher and higher value. So of course it will give you a return as per the growth, but you are keeping on investing. But in between, so if it keeps rising like this, and in 10 years the 10 rupees becomes 40 rupees, right? 10 years, basically if it grows 15% every year, then 10 rupees will become 40 rupees in 10 years. Okay? And if you keep on investing like this, then you get, let us say, 12% IRR. Okay? In between, if it falls once, your return goes up because you ended up buying lot of units at a lower NAV. Lot of investment went at lower NAV. So people who are long-term investors, if they stay committed, they benefit when the market falls. Why? Because lot of your investment starts going in when the market is at a... See, if it keeps going one way up, then you're buying at a higher and higher price, but you'll make some return. If it goes down once, the return goes up. In the journey, if it goes down twice, the return goes up even more. So for people who are monthly investor or SIP investor, volatility is an opportunity to build wealth. Because if the stock market keeps going one way up, it will behave like a FD only, no? Because it is going up and down, you are able to buy at different levels and ultimately you will make a... See, from 1991 till 30 years, it has gone 12% year on year. But in 2008, it fell by 60%. In 2022, once it fell by 10 to 15%. In 2016 also. So every year, there is at least one occasion where the market falls 10 to 20% from its highest level. For people who are not disciplined, or people who get scared, those are very, very bad occasions. They make them, sleepless nights. But for people who are disciplined and people who are patient, those occasions are great opportunities because your investment is happening at a lower level. And when the market recovers, it will give you a sudden jump up, right? So what this shows, instead of market going only up and up, whenever the market falls, it increases the return of the long-term investors. Let me put it differently. In 30 years, it has given 12% year on year. Now, if the average is 12%, how can you get more than 12%? It's an arithmetical problem. If something, right, if it is grown 12% every year for 30 years, how can you be so smart that you get more than 12%? How can it happen? So let me explain. In 30 years, long-term average is 12%. Okay, so now hear carefully. Whenever you invest at a time when the recent average is below 12%, that means in the future, you have to get more than 12%. Only then the average will become 12, right? If I tell you that 30 years, the average is 12%. But in the last 5 years, the average is only 9. So what is going to happen in the next 5 years? It has to be more than 12, only then the average will settle at 12. No? If I tell you that I want to go from here to Panjim and I want to go in 1 hour. So you tell me for this distance, the average speed you have to go is 60 kilometers per hour. But first half an hour I drive only at 30 kilometers per hour. So next half an hour, how much I have to drive? 80 or 90 kilometers per hour. So that is how it works. If the long-term average is 12%, you invest when the recent average is very poor. That means the near-term average is going to be much higher. Correct? So actually when the market falls, you should be continuing your investment because that benefits you. Correct? So these are few things I wanted to share, and like I mentioned, maybe I'll just reiterate one more time that this is not that you have to start investing after you accumulate a lot of money. You have to, the earlier you start, the longer you keep investing, and the better return it gets, it will have a disproportionate impact. Correct? So this is what I wanted to share with you. Maybe I'll take a pause here. I'll invite Dr. Sel so he can point out if there's anything I've missed, or maybe you can take questions also. Thank you for listening me out. Thank you very much.
Okay. You can hold now. So was it not a terrific session?
Yeah.
So a big hand first for sir. Because in fact, even I have learned a lot of things. In fact, for me, my summary of all this presentation is basically the definition of SIP. Now I can change it. First, it was mentioned as small is powerful. Now, in my case, I will say stay invested patiently. From what he has said. Correct or wrong? SIP, stay invested patiently.
So, I can tell you one thing. There is one more thing which we had coined for people who follow cricket or any sports like tennis, cricket. You know, in tennis, there is a phrase which says, keep the ball in the court. Okay. Because tennis, you know, is a very excruciating sport, like, you know, very long court, you have to run a lot. But do you know that tennis is the only sport where they put up one statistic? It's called unforced errors. You know why they put only tennis is the only sport where they put unforced errors. You know why? Because it is so difficult that if you just focus on hitting the ball inside the 4 lines of the court, let the other guy make the mistake. So stay in play. And if you follow cricket, in cricket, what do they say? If you play 50 overs, you will win. Meaning, don't get out, keep taking 1-1 run, you will win. So, like you said, small is powerful. Stay invested patiently. Stay in play. All these are all these are the meanings.
That is true. No, in fact, even I was actually wondering like how exactly, and this slide especially is a very important slide, wherein the corrections actually give you higher returns. So this is like a very good thing. In fact, I must say that fortunately we have actually recorded this entire presentation. We will be uploading it on the YouTube very soon because my son is there who is doing that. He is very much passionate about the YouTube presentations. So definitely you all can all watch it again because I'm 100% sure all will definitely want to watch it again. That is for sure. And let me tell you, this will go like this very good learnings as far as investing is concerned. And definitely, my also another one point regarding how Sir says regarding investing rather than saving. Investing is basically just becoming an owner, whereas saving is lending. In the sense you're just lending your money to someone else. So lending it and investing is totally different. So if you want to be a part of the India's growth story, especially the Amrit Kal now, before we complete 100 years of independence, looking at the way the development is happening as far as India is concerned, definitely you'll be able to enjoy the growth of it provided you stay invested patiently.